At 3 o'clock this afternoon, the Federal Reserve released a list of 15 names. Not a rate decision, not a speech. 15 names, buried in a press release most people scrolled right past. And almost nobody noticed the one thing they have in common. Nearly every person on that list has spent their entire career warning against the exact machine that saved your retirement twice in the last 20 years. Here's what that list actually is. Kevin Warsh just handpicked the committee that gets to decide whether the money printer, the $9 trillion rescue machine, ever runs again. And by the people he chose, the answer is starting to look like no. Now that sounds like good news. No more printing, no more inflation, right? Stay with me, because there's a second half to that sentence, and it's the half that lands directly on your savings account. Let me make the machine simple, because the whole story hangs on it. When the economy breaks, 2008, 2020, the Fed does one thing above all others. It creates money out of nothing and buys up trillions in bonds. They call it quantitative easing. Forget the name. Picture the Fed typing a number into a spreadsheet. There was no $10 trillion. Now there is. That's it. And here's the picture that matters. Before 2008, the Fed's balance sheet, the size of that spreadsheet, sat around $900 billion for decades. Flat. Boring. Then 2008 hit, and it jumped. Then 2020 hit, and it exploded. All the way to nearly $9 trillion by 2022. In one generation, the rescue machine went from 900 billion to 9 trillion, 10 times bigger. That money is why your house doubled. It's why your stock accounts came roaring back after every crash. The printer didn't just save the banks, it reinflated your net worth. Whether you loved it or hated it, that machine has been the invisible floor under everything you own. And today, Kevin Warsh assembled the people who will decide if that floor stays. I've been mapping this exact machine for a while now. Where the balance sheet sits, where rates are actually headed, what it means for the cash in your account. I built a live dashboard that lays it all out in one place, and I'll show you where to find it in a minute. Right now, back to the 15 names, because this is where it gets interesting. Warsh split them into 5 task forces: communications, data, productivity and jobs, inflation frameworks, and the one that should have your full attention: balance sheet policy. Read the names and a pattern jumps out. Thomas Sargent, the Nobel laureate who wrote the paper on how governments always print their debt away and warned where it ends. William White, the economist who stood up before 2008 and said easy money was building a bomb, while everyone else called him a doomer. Raghuram Rajan, who walked into a room full of central bankers in 2005 and told them the easy money party would end in a crash, and got laughed at. Mervyn King, who ran the Bank of England, launched money printing there, then wrote an entire book calling it a trap. Here's the part that should stop you. That's the one word that connects almost every name on this list: skeptics. Warsh didn't pick cheerleaders for the printer. He picked the people who spent their careers warning it was poison, and he put them in charge of studying whether the Fed should ever use it again. Now think about what a committee is actually for. You don't assemble 15 of the world's loudest critics of a tool to expand that tool. You assemble them to build the case against it. This isn't a study, it's a foundation. Warsh is laying the intellectual groundwork to tell the country, when the next crisis comes, we're not printing our way out this time. And that is the sentence that lands on your savings. Think of the printer as the airbags in your car. You never think about them. You hope you never need them. But you drive a little easier knowing they're there. What Warsh is quietly doing is taking the airbags out and telling you to keep driving the same speed. Because here's how the last 2 crashes actually ended. Markets fell, retirements got cut in half, and then the Fed flooded the system with new money and pumped your accounts back up. That rescue is the only reason a lot of people ever recovered. Now the man running the Fed is building the case to not do it next time. So picture the next real downturn. Your accounts drop, same as always, but this time, there's no flood of new money to lift them back. No rescue. The floor you've been standing on for 20 years, the one that always showed up, just isn't there. Whoever's holding real assets rides it out. Whoever's waiting for the bailout is still waiting. Now here's the twist, and it's the part the headlines will get wrong. This is not Warsh turning hawkish. He still wants rates low, probably all the way to zero over the next few years. His playbook is cheap money without the printer. Lower the cost of borrowing to the floor, but don't flood the system with new dollars. Reward whoever's strong enough to borrow at the bottom, and let everybody else fend for themselves. And do you know who gets hurt most in a world of zero rates? The saver. The retiree who did everything right, who moved into CDs and money market funds and treasuries for a little safe income. When rates go to zero, that income goes to zero. They stop paying you to be responsible. We lived this exact story for a decade after 2008. Savers got nothing, and the only way to keep up was to push your money into things that could actually hold value. So look at the trap from both sides. Rates grind to zero, and your safe savings stop earning. Then the crash comes, and the rescue that always bailed you out isn't there. Squeezed on one end, exposed on the other. This is exactly why I built the tool I mentioned. It's a free dashboard at timtalksfinance.com/members, the macro command center. It tracks the Fed's balance sheet, the real rate path, and where the pressure is landing on savers, in plain English, updated as this story moves. No credit card, takes about 2 minutes, and it's the same map I'm reading from right now. timtalksfinance.com/members. Now let me show you why the timing of today's move is the tell. Here's what makes today so clever. This morning, the weekly jobs numbers came out. Unemployment claims fell to 215,000. Layoffs? Historically low. On paper, the labor market looks calm. Solid even. And that calm is the cover. You don't rebuild the fire department while the building's on fire. You do it on the quiet afternoon when everyone assumes the fire will never come. Warsh is moving now, while the data looks fine and nobody's paying attention, precisely because it looks fine. By the time the numbers turn, and they always turn, the committee's work is done and the new rules are already in place. The time to notice the airbags are gone is not the moment of the crash. If you saw my breakdown a couple months back on the new ruler Warsh built to measure inflation, this is the same playbook. He doesn't change the number in front of you, he changes who holds the pen. Same move, bigger stakes. So strip it all down. The Fed is quietly assembling the case to retire the rescue machine. Rates head toward zero, so safe savings stop earning. And the flood of new money that lifted your accounts after every crash may not come the next time. In a world where the people running the money have decided not to print to save you, the only real protection is the one asset they can't print more of. That's the whole logic behind hard assets, and it's why more of this audience keeps circling back to Bitcoin. Not as a gamble, but as the one exit that doesn't depend on a rescue that's being quietly canceled. You don't have to act on that today, but you do have to see it clearly. Because the 15 names drop this afternoon, the deadline for their findings is the end of this year, and the decision they're building toward gets made whether you're watching or not. So do the one thing that costs you nothing. Go to timtalksfinance.com/members. Free, no credit card, about 2 minutes, and watch this move the way the Fed watches it, with the balance sheet and the rate path in front of you instead of buried in a press release. I update it as the story turns. Subscribe so you're here when the task forces report, because that's the day the new rules stop being a study and start being policy. I read every comment. Tell me straight, if the rescue really isn't coming next time, are you getting ready for that? Or still betting they blink? I'll see you on the next one.